that was the SBI management giving us a brief of the kind of earnings that has come out, and it's pretty much in line and not an outperformer with respect to street expectation, but pretty much in line with what the street was expecting. We have now joining us Jignanshu Gor, who is from Bernstein, to talk about his report on food delivery platforms Swiggy and Eternal. Jignanshu, thank you very much for joining us on ET Now. Uh, you are preferring Swiggy over Eternal. Why is that?
Thank you, Sajid, for having me here. It's always a pleasure. I would say I am bullish on both to grow. However, from the price that Swiggy and Zomato or Swiggy and Eternal are at today, we think there is more disbelief on the quick commerce business of Instamart to turn profitable as well as grow as fast as Blinkit. And we think we see greater possibility of surprising versus expectations on Swiggy. Which is why, tactically, given the price band that they trade at, we feel there is more upside in the short to medium term on Swiggy. However, structurally, we are positive on both the stocks.
How do you look at the quick commerce play between both the players, Swiggy and Eternal?
I think Swiggy and Eternal are deviating in terms of how they approach quick commerce as a business. Eternal has gone for rapid store expansion, but a similar sized store structure everywhere, and is replicating success which they have had in Delhi NCR. Swiggy, on the other hand, is going for larger sizes, more non-grocery assortment, bigger AOV, and slightly more measured store expansions, plus providing private labels products as well, which Blinkit is not. So I think there is a deviation in how they are approaching this. However, we think this is not a winner takes all market. So there is ample room, at least for the next 3 to 5 years, for both of these players to grow. For the next 12 to 18 months, for both of them to grow at near 100%. And hence, we don't position it as either or. We think there is room for two or maybe even three players in this market for sure, to be large and to be profitable.
Right. Jignanshu, hi, good afternoon. I want to understand what drove the rationale to initiate coverage now on both Swiggy and Eternal. Is it only on the back of their recent earnings that we've seen, or do you think there are other supportive macros that are at play that now make both of these look equally attractive?
See, I think this is a transfer of coverage internally. Somebody else was covering these stocks, so Bernstein always has had a positive view on both of these stocks since initiation for Zomato and since the IPO for Swiggy as well. What are the catalysts in the near term? I think this space is going to get slightly more competitive than it was in the last 2 quarters, in the next 2 quarters. Given that Zepto has announced a fundraise, given that Swiggy has announced its plans to do QIP, as well as in the latest results, we saw the aggression from Reliance Retail as well on growing their quick commerce business. I think what's interesting is to look beyond the next 2-3 quarters on how this competitive intensity can actually play out in the growth and the margin numbers. We think while there will be some near-term pressure on margins, growth should be great and robust because more competition is helping increase customer customer visibility of quick commerce itself and hence add more users. But in the long run, current leaders should be able to sustain their lead, which is essentially Eternal, Swiggy, and Zepto, and turn the leaf on profitability as well.
Jignanshu, all are in race to raise capital, whether it's Swiggy or Zepto, and Eternal has already raised capital. What about profitability? According to you, when will both of them be profitable?
See, I think Eternal has been very close, especially on its quick commerce business, very close to profitability for a while. They have chosen to reinvest that in growth versus driving profitability. Swiggy is a few quarters behind, maybe 6 to 8 quarters behind on the profitability curve, given that its business is younger and smaller versus that of Blinkit. Uh, Today, we feel the right metric to look for is growth and unit economics at store level versus looking at corporate level profitability. Swiggy has guided towards a contribution margin profit for in Q1 of next fiscal year, and I think that is where they will be tested for. Slippage there would be costly. We think they should be able to meet it. Blinkit contribution margin is already profitable. I think just EBITDA profit is probably a few quarters away given the competitive intensity. But I think today, given the size of the prize and the investments that everybody else is doing, we measure growth, we measure their economics at a store level if they are in the right direction to cover their fixed costs, rather than focusing on EBITDA profits, especially given the amount of cash that both of them have.
Jignanshu, appreciate your time and thanks so much for sharing your outlook on both of these big players, Swiggy and Eternal. Thanks so much.